Title. In this video, we go deep into Dutch taxes for 2025, with real numbers and real ways you can save money. You'll learn Box 1 income tax rates for 2025. Key tax credits most people forget. Deductions and allowances available right now. How effective tax rates can be much lower than the headline numbers. This video is for employees, freelancers, ZZP, expats living and working in the Netherlands, anyone preparing their 2025 tax return. No boring theory, only practical info that matters. Subscribe for clear Dutch tax and money videos. Most people think Dutch taxes are complicated and scary. Today we'll break it down in clear English with real rates, credits and ways to save money, specifically for the 2025 tax year. Forget myths, let's talk what really affects your wallet. Box 1. Tax rates 2025. In the Netherlands, the main tax you care about as an employee or freelancer is Box 1. Income from work, pension and your home. For 2025, the income tax brackets are up to €38,441, 35.82%. From €38,441 to €76,817, 37.48%. Above €76,817, 49.50%. That's headline tax rates, but the tax you actually pay is usually much lower once credits are applied. Tax credits you can use. Here are the big credits that most people miss when first filing. 1. General tax credit, Algemene Heffingskorting. Up to €3,068 in 2025, income dependent. 2. Employment tax credit, Arbeidskorting. Up to around €5,599 in 2025 for people who work. These credits reduce your total tax bill, not just a rate on your income, but actual euros off what you owe. If you qualify for both, you can knock thousands off your tax. Many people assume they pay the headline rate, but you don't. Practical examples. Let's make this real. If you earn €48,000 per year, tax before credits, €17,745. Less general tax credit, €3,068. Less employment tax credit, €5,599. Final tax, €9,078. That's an effective rate of 19%, not 37 to 49%. For €60,000 salary, effective is around 28%. 4 to 5. Deductions you might not know. Real deductions that actually lower your taxable income in Box 1. Mortgage interest deduction. If you own your home and pay interest. Medical expenses, if they exceed your deductible threshold. Charitable donations with documentation. Work expenses for employees are less deductible now. Most travel or office costs are covered by tax-free allowances from your employer instead. House, doctor, charity heart. Expat tip plus 30% ruling reality. Expats may have heard of the 30% ruling, a tax advantage that lets you receive part of your income tax-free if you qualify. But in 2025, the rules changed. The partial non-resident status has been abolished, so you may now pay Box 3 taxes on your worldwide assets too. That matters if you have savings or investments abroad. 6 to 630. RAP plus CTA. So the real takeaway? Know your Box 1 rates. Use tax credits. They save real money. Don't overlook deductions you actually qualify for. Taxes don't need to be confusing. Subscribe for more practical Dutch tax and money videos. Dutch taxes in 2025 can be simpler than you think. Box 1 income tax has 3 brackets. Up to €38,441, taxed at 35.82%. €38,441 to €76,817 at 37.48%. Above that at 49.50%. Those are headline rates. Tax credits make a big difference. General tax credit up to €3,068. Employment tax credit up to €5,599. These reduce your actual tax owed. For €48,000 income, effective rate can be 19%. Deductions include mortgage interest, medical costs, charity. Expats should know 30% ruling rules changed in 2025.